Hey, this is Jared Krause, host of the Buying Online Businesses podcast, and this is episode number 7, and I'm talking with Adam Beebe, who is the senior broker of Latona's website brokers, where they sell anywhere from 5 to 6, 7, and even 8-figure businesses. And in this episode, we talk a lot about how to go away and start becoming a website investor and what you need to know when you're a beginner, how to become an attractive website buyer, what you need to do to educate yourselves, and how you can go away and become successful like other people have gone away and bought and sold website businesses. So guys, if you're looking at starting out buying online businesses and making money online, this episode is certainly for you. So much value in there. So I hope you enjoy. So, hey everyone, and welcome to the Buying Online Businesses podcast. And today I get to speak with Adam Beebe, who is a senior broker at Latonas.com, who have been a website broker in this market for over 10 years now, Adam. And I have to say, thank you so much for coming on, Adam, and I do greatly appreciate it.
I appreciate the invite, Jared.
And so, Adam, today we're going to be talking about what makes a good website investor for beginners, those people that come to you guys and wanting to jump into this field or have never really, seen this industry itself and want to start website investing. But before we dig into that, I want to ask, what sort of drew you to the space of buying and selling, or being in the brokerage space of the buying and selling website space completely? Yeah.
That's a great question. I graduated college and didn't know what else I wanted to do after college. I'd like to continue it. I'd like to actually probably still be in college, but really best 6 years of my life for a 4-year degree. But was going to go to law school, all set here locally here in Athens, Georgia, and then just decided I didn't want to spend the effort or the money to do that. Started in sales, so my whole adult life, professional life, and I'm turning 50 this year, has been commission sales. So started with that and knew the owner of Latona's, Rick Latona, socially probably 25, 28 years now. And I started working with him in 2007, part-time. And he had been doing this since the mid-90s, and I started with him buying, selling, and trading domain names. So these are domains that we owned that we then sold for a profit. He also had a domain name newsletter. This is going back, it's been a while since the last one went out. It must have been 2006, 2007. But we started to transition from domain names to what we're currently doing, which are cash flow positive businesses, really in late 2008, early 2009. And the reason being is the domain name industry, and it's still not what it used to be, but it's significantly contracted in late 2008, 2009. Part of that was the global recession, which led to less people looking at a speculative asset, which ultimately a domain name is, unless it's one of the rare ones that is known as a category killer and or has significant click-through revenue. There is a certain amount of just an approximate of what the value of this could be, and it's there are some very valid ways of determining what a domain should sell for. But as opposed to having more metrics available to us when we're, in this case, dealing with businesses, which have a present track record of cash flow. We only deal with businesses that have made revenue, a profit, I should say, for at least 12 months. And the vast majority of the businesses we represent have multiple years, if not a decade or more. So how I got into this business was through a friend that I've known for quite a while, and I started 12 years ago in domain names, and now have been full times in businesses for right at a decade.
Wow.
So yeah.
So you've definitely been in this space some time, and I've learned a fair bit of sales myself, and I actually teach sales to some of my team. And they say if you can master sales, you can master life. And I think it's a good way to go about it because it does build a lot of confidence. And I want to touch on that great point that you made of the websites that you guys list. Is you're mainly listing websites for sale that have a 12-month track history of, revenue and profits, and, usually, longer businesses have been around longer than that. What is your, like, why is that? And I think it's a really good thing. And I'm pretty certain I know, but I want everybody else to know, because there are people out there who do sell websites that have been around for 6 months, and I find they're just not as stable. And this is the stuff that I teach my clients, is to not go away and buy something that is, under that 12-month mark. But why would you say you only list those types of businesses?
Well, a couple of things. And yeah, we solely list businesses at 12 months. It's not primary. Yeah, it's solely. That's all we
Okay.
do. And the reason being is that through trial and error, we used to list businesses. And when I say used to, this is 8 years ago. This has been a while. We've learned that it's not to say you can't have a quality business in 6 months or 3 months or 8 months, but the odds go up dramatically if someone is still doing a business for a year, which means it's seen the calendar year, all the possible ups and downs that are attributable to what time of year it is. It's gone through that, and if it's operating, and it's not an arbitrary 1 year. So then the thing is, what's the difference between 10 months or 14 months then? Well, if you go through the holiday seasons, you go through, if it's a more of a summer product, you've gone through the summer season, so you kind of know what's going on within that first 12 months, but you need that first 12 months to see if there's one or more seasons that are dramatically more or less than another one. Q4 is always big, it's the holidays, but that's one of the reasons why we only represent 12 months or older businesses, because our buyers are only looking for that. Rarely, and there are companies out there, and this isn't a negative, it's just an is, where they, it's more just direct buyer seller interaction where you pay a listing fee, and we currently don't have that business model where, if we're working on a commission basis only, which we currently are and will continue to, we're going to want to have a better than average shot in being able to sell a business. And just trial and error experience, it's just really hard to sell a business that's less than 12 months. We don't have buyers for them on average.
Yes. Yeah, certainly. And those places are like marketplaces where they can sort of just list. It's kind of like eBay, but for buying and selling websites, right?
Tell people it's the eBay and that's not a bad thing. It's just, but it is an eBay, and that's what it is.
Yeah, it is what it is, and it can work for some people, and sometimes people get swallowed up on those places as well, as we know. But I think that's a great point to really notice, is what Adam's saying here, guys, is that businesses that are under 12 months, especially, let me put a massive point on this, especially seasonal businesses, if they've only gone through one season, like you're selling swimwear or a holiday season product, and you've gone through one season, you can't compare that to another season if it's less than that 12 months. And I think that's a really good thing that you guys do at Latona's, Adam, especially for the market and people wanting to get into this space and buy good businesses. So there's so many mistakes that people can make when first looking into this industry and going, I want to go away and buy my first website business. And I know that I learned a lot myself just buying my first website business. But what would you say, and the mistakes can go up depending on, who they're dealing with and different brokers, and, whether they're going to these eBay type marketplaces. But what would you say some of the biggest mistakes are that you see that buyers go and make when they're looking at buying their first sort of online business?
The best thing to do, and the thing that's really needed to be done, is making sure that the information that's being provided is accurate. And full disclosure, all over our site, as well as all in my signature, is the buyer is responsible for their own due diligence. That's a liability standpoint, and it's illegal. It's the legalese of having to operate as a third-party broker. But if I were a buyer, and what I tell buyers to do, because we get a lot of repeat and referral business, It's also something where our reputation online is important to us. So if it's, if we would rather forego a sale than do a sale, which turns out to be a terrible experience for the buyer, and then shotgun us on the internet, so to speak. What the buyer needs to do is they need to get third party reporting as to the revenue and as to the traffic. And by that, I mean not just screenshots that can be doctored, but to do a screen share and to have a very, high level of comfort that what's being presented is accurate and is for the business in question. It's also something where, I've been on I've gotten on a plane and I've attended buyer seller meetings, and that's more of a, if we're talking about a 7-digit or an 8-digit deal, and our average sale price is somewhere in the upper 6 to lower 7-digit. But once it's getting into the, 3, 4, 8 million on up from there, a buyer is going to want to meet the seller face to face. I mean, if you're spending anywhere near that type of money, it makes no sense to do anything other than a phone call and to screen shares and all that. But if you once you get over that hurdle before signing any contracts or putting anything in escrow, face-to-face meeting is definitely what I would suggest. That's the big thing. Just a revenue from a third-party source in the form of a screen share, and as the ticket price of the business goes up, then the amount of due diligence needs to go up, and that would lead to an in-person meeting. It would also validate, I think, and it doesn't have to even approach upper 6 digits, but it would, if it's a first-time buyer who, is accomplished in some area or some multiple areas of business, but not in running an online business, it's worthwhile to pay someone to do and to help them do due diligence. And because, they don't know they know what they're looking for, but they don't know what they should be looking for always.
Yeah, I totally agree with those bigger listings that not just meeting people face to face, but having professionals like accountants and all that sort of stuff, especially on the 7-figure to 8-figure businesses. That's very, very important. And like sort of going down from that, some lower 6 figures into the 5 figures, those types of businesses that most people, I dare say, start out at, which is what I see, is that screen recording or screen share with somebody. Normally what I tell people to do, Adam, is get viewers access of the business's bank account or merchant account and traffic account, and then jump on that screen share with all of their questions and say, hey, like, can you tell me what's going on here? I want to understand this a little bit better. And then I find, and feel free to add to this, Adam, is that when people jump on the phone with the seller, they really, their responses can't be scripted, and it's not an interrogation at all. It's definitely just a conversation, but you can get a way better understanding of the business and the person, and come out with far more information than you initially wanted to, just by backwards and forwards emailing. Would you agree with that?
I would agree with that, and I also the point you made, access and having view only access. That's one step above a screen share. That's definitely in an ideal sense and a sequence of senses, or in a sequence. Yes, get viewer access, then do a screen share. Having said that, it's a two-way interaction, meaning the buyer is the one with the checkbook. Normally they're the one dictating the pace of the deal. Sometimes the seller, to be candid, to give access, even view access, sometimes I've run across, well, that's fine. I need to see proof of funds before I do that, which is understandable. It's also understandable that the buyer is going to want to have, the screen share and the access. But I do agree that the being granted viewer only access is better than a screen share, because that would much more readily prove that this is the actual account that we're going through. I don't know if there was another question or another thing to agree with, but the one thing that really struck me in what you said, Jared, was the relevancy, if you will, of getting that view only access. But understand there's going to be some seller pushback here. It's really, it's not, when you say it's not scripted, there's not going to be okay, Mr. Buyer, you do this and then do this and then do this. Not that, this is being implied, but a seller's going to go off road, so to speak. They're not going to let the flow chart progress the way that there may be, hey, this, in an ideal world, Mr. Buyer, this is what you should do and when you should do it. But understand that, especially if a seller is legitimate, some sort of pushback is to be expected, meaning they're going to want to know who they're dealing with, just like the buyer is going to want to know who they're dealing with. That's not a bad thing. That's a good thing.
That's a really good thing, actually, because they've gone away, and I speak about this a lot, is they've gone away and they've built this business up in some way. It's their baby, right?
Absolutely.
And they don't want to go away and hand this over to somebody who is incompetent. And also, it's that seller pushback means they do care about their business. It's not like, I don't like you as a possible purchaser, but they're also testing you to see if you're good enough to come in and take over this business and grow it and maintain it, depending on what your approach with it is. However, I really think it's important for the sellers to have a little bit of pushback and test the possible purchasers and put them into a position of like, hang on, as a seller, should I be spending my time with this person when they could be fudging around or bumping around and not really so solid and interested in my business, when they could be spending more time with somebody who is a more attractive buyer.
And I think you brought up a really good point. It's surprising when you say, sellers are, it's their baby and all that kind of stuff. When I started this, I was more so focused on, well, listen, if anybody comes with the right dollar amount, the seller's going to do it. There have been times where we were getting a deal that would have been acceptable, but there wasn't that connection between the buyer and the seller, and virtually all of that disconnect is based on the seller not being convinced that the buyer is going to be able to continue the site. They actually really care about it. They just don't want their asking price and then they go away. If they think that the buyer may be in over her head or his head, it's not a personality conflict most of the time, or virtually any of the time. It's mostly, I don't want to say this happens a lot, but there have been circumstances where money's in order, everything's in order, structure's in order, terms are in order, et cetera, et cetera. And there's been some pushback from the seller just simply saying, look, I just don't think this person, nothing against this guy's personality, but I just don't think this person is going to succeed. Now, that could be that the seller really cares about the longevity of the business, and or the seller may care about the buyer. He doesn't want to see them spend this money and fail. And that's great for the seller to feel that way. What I'm kind of stream of consciousness doing here is, it surprised me, albeit not a large percentage, the significant percentage of deals I've seen that have gone through that process where we needed to work through the buyer being able to do that or being able to hire someone who could do it. It really surprised me. It's not just the check.
And I think it's great that it is like that, Adam, because, and this is when I would dare say it's the same, like in my life that I've noticed, the more I've started to connect with people who are at a different level to me in life and success and financially, I've noticed that it's not always about the money, and there's the other things that are more important to them, and it comes back to their morals and their values and things like that in life. And it may be a little bit different for businesses that you're selling anywhere from like the 10,000 to the low sixes, where money is a more important thing. But would you say it's definitely in that higher tier of businesses, high sixes into sevens and eights, where it's really important for the seller to sell the business to somebody they understand are going to be able to take that business to the next level or look after it well? Would you say that's a thing?
Yeah, that's an accurate thing. So yeah, that's a very accurate observation. That yeah, I mean, right. If someone's selling something for $100,000 or less, it's normally, well, I'll train them and then I wish them the best. But if it's getting into, approaching $1 million, well into the millions, then yes, it has more to do, I think, with the seller building it and investing a lot of time, money, and energy in it, wanting it to be a success. That's part of it, and then part of it is, especially if the structure of the deal, if there's an earn out, if there are payments after the sale, guaranteed payments, the seller has to be convinced about the buyer competency to run the business so as to ensure that he's going to get paid after the actual close and the down payment. If it's a multi-million-dollar deal, more often than not, there are going to be some payments after the sale, meaning the majority in cash down, the remaining over a defined period of time. If the seller doesn't think the buyer is up for the task, it's not a negative. It's just they're also, the seller's looking after their interests. I want to be paid what I'm paying, what I'm selling the business for.
Exactly.
And I don't think the buyer can run it.
Yeah,
it is what it is.
Oh, exactly. It is what it is, and I think it's a great for a seller. It's a great mindset to have, and it's a great thing to hedge themselves against, is to ensure that, hey, like, we could do, whether they do an earn out or finance or whatever it is, all these different structures you can do when you go away and buy a business. But yeah, like, let me make sure that I'm protected here and I do get, the value of the business. And I think this is leaning into a really cool conversation, Adam, with a question that I want to follow up with and ask, is that we're talking about sellers being solid in wanting to sell their business to somebody who is an attractive buyer. But what makes an attractive buyer? What would you say are some of the qualities that make a person who comes to look at buying websites more attractive than somebody who's just bumping around and not knowing what they're doing?
Has the money to buy. I mean, that's number one. That's pretty intuitive, but I think that should be a given, but not to, and I'm not casting aspersions at all on anyone, but the reality of life is there are tire kickers out there. So the very basic thing needs to be that the person can actually buy it. Of course, there needs to be the due diligence. It needs to be the right business. The seller has to perform. But there's three in my business. There's three sides, and it's a Venn diagram, and where everybody connects. That's the sweet spot that we want to stay in. Seller expectation, buyer expectations, and then there also has to be, hey, the broker needs to be taken care of, because we're 100% commission only. That's our business model. We're presenting our sellers to our buyers. We want to make sure we're making best use of our time, as well as the buyer and the seller. Now, as far as the type of buyer that we like to see, is we like to have someone feel confident with what they know, and then also be aware that they may not know everything, or that they are wanting to educate themselves on issues that they've seen, that it's not a negative, it's just they haven't run into. So I get people who are, hey, for a lot of, every time you turn on the TV, there's something about Amazon. Buy something from Amazon, sell something on Amazon, Amazon Prime. not as much the recent Jeff Bezos stories, but just that, how crushingly powerful it is in the, not only the online space, but the brick and mortar space, how they're crowding people out and things are going online. So we run into some people who, it's the gold rush, isn't it? I mean, that's the people who are like, hey, I can make money doing this. And they're absolutely right. They can, but they need to make sure that they crawl before they walk and they walk before they run, and that they, that the buyer, the ideal buyer, is appreciative of the fact that there is a learning curve. And most people understand that. Most people are, in a very healthy, complementary way, are go in carefully and are not just they're hypersensitive to what they don't know. So the succinct way of answering your question is, having a buyer who is willing to accept that even though I'm a success over here and know this type of business, I want to educate myself first, just to make sure that I'm making best use of my and everyone's time. This is the buyer talking. And that before I spend any money or any time of anyone's, that I spend some time educating myself. Like I understand the difference between FBA and FBM. I understand the difference between, what a buy box is. I understand, what kind of Amazon seller account can transfer. I mean, just the internet is a vast resource, and there are, and I've been concentrating on Amazon for the past few minutes, but there's all sorts of, Jared's resources. There's all sorts of, if we're looking at just Amazon, Facebook groups you can get involved in, trade shows you can go to. I just got back from Prosper in Las Vegas. There's the Prosper, the ICREs of the world, the Resonates of the world, SellerCon, Amazing.com. There's a whole bunch of these type of things out there where I think it synthesizes down to what I would do if I were a buyer, knowing what I know, is start attending some shows, start going to podcasts or attending podcasts, start joining Facebook groups, and no one's a guru. No group knows everything. And if they say they do, they're selling you something, and that's fine. But you run into a few that are, you listen to a lot of different people and you draw on the common denominators. And it's okay to pay someone for information. That's fine. But kind of vet that against what other parties are saying in the marketplace. That's the type of buyer we want. Type of buyer who's willing to go to school a little bit.
Yeah, that's great. And this is not at all a plug to what I do, but I am no guru. I'm always learning, and my clients are my biggest teachers, and I love my clients and everybody else that comes along and wanting to learn more from me as well. Like, I learn so much from them, and that you're right. Like, it's go away and learn something, and it doesn't have to particularly be from me. It can be from anybody, Facebook groups and all that sort of stuff. I have a group. If you want, it's a free group. I'll put it in the show notes for people who may want to check it out. If it's not for you, great as well. But those people that they do want to learn from, or podcasts that they do want to listen to, or whatever it is really test those teachers or people that are putting out that content to see if they are adding the value that's going to help them to become that attractive buyer. And there is a lot of different resources out there. I know that when I first started, I was scratching around a lot, Adam, many years ago, scratching around a lot to try and work out how I could become, and it wasn't for me to become an attractive buyer, or to use that term, become an attractive buyer. I didn't even know what that was. It was for me to really protect myself and my money and make sure I was going to make a wise investment, rather than become an attractive buyer when I didn't even know that it even existed. And that's what I think everybody else does as a first-time purchaser. Or even if you're going to look at doing this, not just for the first time, but build a portfolio of websites that you're going to buy from brokers like you guys, Adam, and ensure that each time you do go away and buy, that you have the education and you keep growing in that field. Would you agree that a continuous learning, Adam, is pretty key?
Absolutely. And I mean, not just confined to the online space, but just life in general. I mean, if the more successful a person you run into, the more they're lauding the need, if you will, to for continual learning. I mean, that's just, the more you learn, the more you realize, the more you could learn. And I mean, that goes for brokers as well. That goes for buyers, sellers, in business, outside business, just in life. So absolutely, I would agree with that.
Yeah, Warren Buffett, he's the one of the richest men in the world, if not the rich. Well, I think Bezos is taking the cake, but and Jeff Bezos is the Amazon seller. So funny that, but yeah, I know that Warren reads like 6 to 8 hours a day, and he's already crushing it. And yeah, that continuous learning is really, really important for any aspect of anything we want to achieve in life. And so that's a really good point, I love that you really said, Adam, is to go away and suss out those people that are doing different teachers and working out if they're, somebody who is like not a guru, but somebody who is something that can give you the information and the skills that you need to achieve what it is you really want. And so so let's say there were 3 tips of somebody who want to become a website investor or an attractive buyer. And that, education would be the first sort of tip. Would you have 2 more?
Education is the main thing, and that's number 1 by far. I think that once you educate yourself, there's quite a few, things that follow under education. I think that the successful buyers I've run into, investors that I've run into, tend to, much more often than not, once they have gotten accustomed in a niche, and once they have built the infrastructure and gotten the knowledge base that has been accrued via the education, they don't try to reinvent the wheel. Meaning, they can diversify and they can invest elsewhere, but what they're primarily focused on is the wheelhouse that they've created, and that they just didn't fall into that they've educated themselves to do that. So I think the number 2 tip would be, it's just the popular phrase, at least here in the US right now, stay in your lane. I think you don't have to necessarily stay in your lane. I think, don't get out of your lane, meaning don't completely get out of what's been a success. I mean, the whole point of it here is, it's not just making money, but it's also enjoyment, and we can espouse the deeper virtues of life and such. But the things that fund those things are, the steady revenue and the steady income. So if someone has spent a lot of time and effort getting good at a certain thing, that they should continue to harvest that field, if you know what I mean.
Yeah.
That's tip number 2. Tip number 3 is probably the flip side of tip number 2, which is, it's kind of, don't get pigeonholed into something. And it's not contradictory, meaning it can be, go for and continue to harvest in this field, but don't be tunnel vision, meaning, and it goes back to number 1, continue to educate yourself, be cognizant of trends in the market, not only from product, but from fulfillment channels. Amazon's not going to be the biggest forever. People thought Ford was. So they are for the foreseeable future, but there's always going to be someone else, another startup that comes and reinvents the wheel or puts a different spin to it, and then that catches fire and that overtakes. So kind of be just continue to stay apprised of current events, educate yourself in the present, but I guess to refine tip 3 is to realize the trends that are coming. You know, what would spend some of your education in what's down the road. You know, stay doing what you're doing. Tip number 2, and don't over specialize, but don't just cast it away. But you know, number 3, just kind of spend a little time, not daily but weekly or whatever like that, staying aware of what could be coming down the pipeline. And yeah, that's what I got.
Yeah, that's amazing value right there, Adam. Is just, and I want to touch on each of those because they're so powerful in themselves, and we can open up different conversations on each one of those tips. That's how valuable they are. And so, number 1, obviously education. We did really open up the can of worms with that one, which is really good. Number 2, the stay in your lane. And what I see is really important for successful people by staying in your lane, and it can mean so many different things, is you could buy a business that is a bolt-on business that can help you grow the business you already have, or even just say you buy affiliate websites and you're really good at affiliate marketing, or Amazon affiliate or Amazon associate type businesses. Like if you know that really well and you want to get another business in your portfolio, it wouldn't be smart to go away and go, I'm going to buy a SaaS business or a dropship business. It would be wise to go and use the skills that you already have and stay in your lane with that, you know, affiliate and associate type business. And then the number 3 one is, you know, not getting pigeonholed into something is such a great term, and, you know, prevent the inevitable happening in the future if you're not aware of the trends that are occurring or are, you know, happening. Like let's look at Blockbuster in Australia, which I don't know if you guys have them in America, but, you know, where people could go away and hire videos, and, you know, and then Netflix came along, and Blockbuster actually did have that. They were going to do a subscription model, you know, all this time ago, and they said, oh no, we're just going to focus on, you know, what we're already doing. And they just missed it. They missed the whole thing. And that's pigeonholing yourself into one area, which is exactly what you're saying, Adam, and not being aware of the trends that are coming and how important digital, you know, content is. So they've missed the whole mark there. And I think that's, you know, it's not just like with billion-dollar companies like Blockbuster and Netflix, but, you know, any sort of business that you own is ensuring that you're really being aware and conscious to the trends that are happening, because as we know, things change real quick these days, especially with the internet. You know, people are jumping up and making hundreds of millions of dollars overnight through different business models, where they're popping up and, you know, look at Uber. This just came out of nowhere. And now there's all these different types of businesses doing that. So, and I know it's a bit different because I got some friends over from America at the moment. They say you guys have, I think it's Lyft over there, which is doing quite well. But these, like, not getting off track, they're so valuable, Adam, for everybody listening. And I just want to thank you so much. And you've just gone through, and I had a fair few questions to ask you, and how we can go away and ensure first-time website investors do really make the most of this podcast and get a lot of value and take that away. And guys, what we're talking about here isn't just listening to what I say and Adam says and a whole lot of other people that we have on the podcast and myself, but going away and implementing it as well. Is, you know, you can only learn so much theory, but Michael Jordan didn't study, you know, the physics and the arch of how to throw the ball into the basket. He went out there and shot hundreds of free throws, or thousands of free throws every day. And that's taking that education into practice. And I kind of want to finish up with like one sort of last question. It's kind of got to do with due diligence, Adam, if that's okay with you. And like, what would you say like a couple of things are that would be great for first-time investors to learn in due diligence? Like, would you say it's traffic, financials, and what would you say 2 or 3 things are that might be important for them to add on and go away and learn about when they're wanting to buy their first business?
I think we covered some of this, and you brought up getting admin view only access, revenue and traffic accounts. I think that it's important. There's something called, this is more so for the benefit of the first time people, but an inspection period where escrow has been funded, the contract's done, the assets have been switched over to the buyer, and there's a concept called an inspection period. We go through escrow.com. It's a third party escrow agent. Different escrow companies call it something different. A due diligence period where all that has been done, and the suggestion to the first time or any time buyer is make sure you set that inspection period long enough where you can see the traffic and you can see the money coming in. It's hard to game things, so to speak. It's hard to, that's reality when the buyer has control of everything and he or she can see the activities of the business going on as expected. There's a certain comfort level there. Now, on a tens of thousands of dollars of a purchase price of a business, that inspection period is usually a few days. Once we get into the hundreds of thousands of dollars, that normally is a week or 2. And then if it's $1 million, we're talking 30 days. Sometimes we're talking, 30, 45 days or so. So that would be the main, other than the admin access or the view only access that you mentioned, other than meeting them in person if the dollar amount warrants, other than if someone knows that they don't know what to ask, that they pay someone who has a track record of doing due diligence. It's well worth spending some money up front to not buy a mistake than it is to quote unquote save that money, don't invest that money, and then end up writing a check for a business that fails and that could have been recognized prior to the purchase.
It's kind of like your investment policy, isn't it?
It's kind of like a home inspection. I don't know how it is in Australia, but if there's a mortgage on it, if it's not quite analogous, but if there's a mortgage on a property, the bank's going to require an inspection, inspector to come in, check the roof, check the foundation, etc. But, why wouldn't you do that on a business?
It'd be crazy not to, especially when you're buying businesses that do cost more than homes and the returns are superior to that of property at the moment anyway. It's the way I look at it is like it's the stuff that if you are going to go away and pay somebody to help you, that's an education that you're going to go away and use again anyway. Like, as opposed to going away and getting a building and pest inspection for your home, you're going to have to hire the same person every time. But if you go through and learn what the person that's doing when they're breaking down the research on the traffic and the financials and stuff like that, that's stuff that you can use on another listing too.
Absolutely right. It's kind of the concept of education. You're educating yourself on a workable due diligence process. Absolutely.
Awesome. Well, Adam, I'm so grateful that you jumped on the podcast today, because there's so much value just in that short sort of 40 minutes for everybody. And so, Adam, where can people go away and find out more about you and more about Latona's and what you guys actually do?
So my email is Adam, ADAM, at LATONAS.com. So that's the main contact for me, and that's really the way I would suggest people to contact me. That's number one. Our website is latonas.com, which is LATONAS.com. That's how they find us. And we also advertise on third-party sites. But I'm one of the brokers listed on Latonis.com, but would love to interact with anybody, buyer, seller, or not sure. And the best way of reaching me is via that email I gave, adam@latonis.com.
Excellent, excellent. So thank you so much again, Adam, for the show. That's it for this episode. Thank you so much for listening, everybody. Please be sure to like and subscribe. And if I'm going to be cheeky enough and you like this episode, please feel free to leave a review. Thanks, guys.
Thanks, Jared. Thanks, guys.